Okay? So how are we going to do that? Where's that coming from? That's a slide. You can't see it properly on there. That's a slide from Goldman Sachs which shows why 12 months is better. We won't go and bore you into the technicalities. Now this bit's going to put you off, but don't be. The complexity of it is, yes, you need to know 7 different things. The value of a company, okay, you need to know the value. You need to know revenue growth of a company. You need to know why PowerPoint isn't moving forward. That's critically important. Okay, it'll come up in a minute. Value, revenue growth, cash flow. Now, I don't care which metrics you use. I have mine. You might have yours. Places like Yahoo Finance, Google Finance will allow you to even screen for this free. But look at least those 3 things to start off with. Why? Because you know those things are bloody important. Profitability, the valuation of a company, the share price compared to profitability. Cash flow growth, probably the most important. And if you don't believe me, cash flow is probably the most important. Please leave. You're in the wrong arena. You meant to go to the maternity thing over there. Seriously. If you don't know why cash flow is important. Same for public companies. Cash flow. Now, I have a measure of cash flow. I won't go into the boring details what it is, but cash flow and sales growth. Okay?